Welcome back to Finergy, where we help you take control of your financial future. Today, we're tackling one of the most important aspects of your financial life, your credit score. A good credit score can open doors to lower interest rates, better loan terms, and even job opportunities. In this video, we're going to show you how to improve your credit score fast with actionable steps that you can start using today. Let's dive right in. 1. Understanding your credit score. Before we jump into how to improve your credit score, let's first understand what it is and how it's calculated. Your credit score is a numerical representation of your creditworthiness, which lenders use to determine how risky it is to lend you money. Scores range from 300 to 850, and the higher your score, the better. There are 5 key factors that determine your credit score: payment history, credit utilization, length of credit history, types of credit, and new credit inquiries. Let's break these down to understand how they impact your score. 2. Payment history. The biggest factor affecting your credit score is your payment history, making up about 35% of your score. This means your ability to make payments on time is critical. Late payments, defaults, and bankruptcies can seriously damage your score. To improve your payment history, focus on making all your payments on time. Set up automatic payments or reminders to avoid missing due dates. If you do miss a payment, get current as soon as possible and avoid missing additional payments. 3. Reducing credit utilization. The next most important factor is your credit utilization, which accounts for about 30% of your score. This is the ratio of your credit card balances to your credit limits. Ideally, you want to keep this ratio under 30%, but the lower, the better. To improve your credit utilization, you can do a couple of things. First, pay down your credit card balances. If possible, try to pay off your balances in full each month. Second, ask for a credit limit increase. This will lower your utilization ratio, but only if you don't increase your spending. It's all about managing your credit wisely. 4. Length of credit history. Next, we have the length of your credit history, which makes up about 15% of your score. Lenders want to see a long, established credit history, as it demonstrates that you've been managing credit for a long time. While you can't change the length of your credit history overnight, there are a few things you can do. First, keep older accounts open, even if you're not using them. Closing old accounts can shorten your credit history, which may negatively impact your score. 5. Types of credit. The types of credit you have account for about 10% of your credit score. This refers to the different types of credit accounts, such as credit cards, installment loans, mortgages, and retail accounts. The more diverse your credit mix, the better it can be for your score. If you only have credit cards, consider diversifying by adding an installment loan or a mortgage. But don't open accounts you don't need just for the sake of diversity, as too many new inquiries can hurt your score. 6. Avoiding too many hard inquiries. Hard inquiries, or hard pulls, occur when a lender checks your credit for a loan or credit card application. These inquiries can negatively affect your credit score, especially if you have too many in a short period of time. To avoid hard inquiries, only apply for credit when you really need it. If you're shopping around for the best mortgage or car loan rates, ask lenders to perform a soft inquiry instead of a hard pull. 7. Disputing errors on your credit report. Sometimes, errors on your credit report can drag down your score. If you find inaccuracies, it's important to dispute them right away. The good news is that you can check your credit report for free at least once a year from all 3 major credit bureaus: Equifax, Experian, and TransUnion. If you spot an error, such as a late payment that was actually made on time, or an account that doesn't belong to you, you can dispute it with the credit bureau. Once the error is corrected, your score could improve. 8. Secured credit cards and credit building tools. If you're just starting out or trying to rebuild your credit, using a secured credit card can help you build a positive credit history. A secured credit card requires a deposit that acts as your credit limit, but the key is to make timely payments and keep your credit utilization low. Additionally, there are credit-building tools like credit builder loans, which are small loans specifically designed to help you improve your credit. Make sure you make timely payments on these accounts to boost your credit score. 9. Becoming an authorized user. If you have a friend or family member with good credit, you can ask to become an authorized user on their credit card account. As an authorized user, you can benefit from their positive payment history, which can help boost your own score. Make sure the credit card issuer reports authorized users to the credit bureaus as this can differ between companies. This can be a great strategy if you're trying to improve your score quickly. 10. Patience and persistence. Improving your credit score is not an overnight process, but with patience and persistence, you can make significant progress. The key is to stay consistent with your efforts, pay on time, keep balances low, and avoid making new credit applications unless absolutely necessary. Remember, small changes can have a big impact over time. Stay on top of your financial habits, and your credit score will gradually improve. So, there you have it, a complete guide to improving your credit score fast. By following these steps, you can boost your credit score and set yourself up for better financial opportunities in the future. If you found this video helpful, be sure to like, subscribe, and ring the bell so you don't miss any future tips. Have any questions or need help with your credit score? Let us know in the comments. Thanks for watching, and here's to your financial success.